Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Raunaq Singh, CEO of Rome, to discuss housing market trends, the affordability crisis, and what assumable mortgages are. Raunaq, it's great to have you with us. Welcome to Trade Talks.
Thank you so much for having me, Jill. It's a pleasure to be here.
You got it. Tell me about Rome and how the company is addressing today's housing affordability crisis through its offering.
Yeah, so, in 20 and 21, we saw rates around 2%, but in the last year, we've seen rates go from 2% to north of 8%. And what's this led to is that the median monthly mortgage payment is now north of $2,600. Today, more than half of mortgages are north of $2,000 on the monthly mortgage payment, whereas 2 years ago, less than 18% of them were. So this has created a huge perverse effect for buyers, where 75 million Americans have been priced out of being able to buy a home. So at Rome, we help buyers wind back the clock on rates and purchase a home with a mortgage as low as 2%, which allows them to reduce their monthly mortgage payment by more than half.
Can you explain what assumable mortgages are and how you can go about finding them?
Yeah. So on the first topic, what is an assumable mortgage? So an assumable mortgage is simply a type of home loan that the buyer can take over from the seller. It is a government-backed loan, and it is a benefit given to you by law. There are millions of these loans that are available, and many of them come with rates as low as 2 or 3%. If we think back to 20 and 21, when we had millions of low-rate originations, around 1/3 of those were actually eligible for the assumption. Now, why is it easier to find these? Is because often the seller doesn't know that their home is eligible for the assumption, so they don't know to advertise it. So we built the first listing platform on withrome.com, where buyers can come in, see all homes eligible for the assumption in their metro area that have been curated for them, and purchase a home directly with the mortgage included.
So it almost sounds in a way this is too good to be true. How come so many people don't know what an assumable mortgage and how, they don't even know it's an option to them?
Yeah, the last time we saw that assumptions were this popular was back in 1980 and 1981, when rates rose from about 2 or 3% to north of 15%. Now, history doesn't repeat, but it does rhyme. And so we're seeing the same surge in assumptions today, where rates are rising. And as a result, buyers are looking for ways for the mortgage to become more affordable. The reason why it's been difficult thus far for buyers to assume a mortgage is twofold. First is discovery of those homes, identifying the homes that are available. If you go over to Zillow and you try to find a home with an assumable mortgage in Atlanta, you might only find 1 or 2 results. But if you pop over to withrome.com, you'll find hundreds, because we've actually built the first ever data feed of all of the homes eligible for the assumption. And the second issue is largely around coordination. It's a lot of work to coordinate all the parties that are required in a home sale and to be able to make them work on your timeline. We take over all of that on behalf of the seller and the buyer to ensure they close on their timeline with peace of mind.
So Raunaq, just so I understand it, because it's the first time I'm actually covering this myself. Somebody wants to buy my home. I have, like 27 years left on my mortgage. They're just able to assume, the remaining balance at the interest rate I got it at, or as a seller, do you have the opportunity to sell at a higher price and make money on the deal? How does that work?
Correct. You can list your home as is, and the buyer will have the opportunity to pick up your mortgage, and you as a seller will be released of any liability on the loan, meaning the subsequent payments the buyer does or does not make will not impact your credit. And separately, all of the equity in your home will be cashed out at closing. The buyer can either make that down payment in cash, or they can take on the support of a second lien.
As someone who follows the housing market closely, what are some general trends you are seeing as we head into 2024?
Yeah, the general trends we're seeing is that inventory is pretty tight because sellers are reluctant to list and sell their home, given they don't know if any buyer is going to go out there and purchase it. And why go through the hassle of listing, putting your home in order if you don't have certainty? And for the buyer, we're seeing that they're largely viewing that the market is pretty unaffordable today. And so this has caused a large amount of immobility in the system because sellers stay in place and buyers don't have inventory to purchase. So we named the company Rome to be able to ensure that everyone knew they could have economic mobility and the freedom to move regardless of the rate environment. So what we see happening in, say, the coming year is as sellers identify that this is an opportunity to get more certainty for their sale, more will begin to list their home, advertise the affordability benefit of buying their home. Why? Because it's the only home in the neighborhood that you can afford. And for buyers, we see them identifying that this is the most affordable way to purchase a home.
Well, it's fortuitous timing that we're talking right now because the next FOMC meeting is coming up on the 12th and 13th next week. What are you anticipating next steps will be regarding interest rates, given the Fed decided to hold them steady in November? And what will the impact be on the housing market if they decide to either raise or lower interest rates?
Yeah, so I see that today we are largely still far away from the Fed's 2% inflation target, meaning that they will likely continue to hold rates steady until we reach that target. And as a result, as rates stay elevated, millions of Americans continue to be priced out. And this has the perverse effect of making them put their life on hold for their mortgage, right? We're seeing more consumers think of their mortgage as an asset and not a liability, meaning they want to be able to get more for their home. And then for buyers, we're seeing them stay on the sidelines and think, well, heck, I might have a few years before I can afford a purchase. But we have customers every day, Jill, that I hear from who can't afford to put their life on hold. One of our customers, Felix, he's a grandparent and he wanted to be able to move closer to his grandchildren before things changed, or he wants a chance to see them grow up. And so when we facilitated his ability to buy a home with a 3.5% mortgage, we're able to bring the rates down from 7.5% to 3.5%, which enables him to save $1,000 a month on the mortgage and ensure that he can actually afford to purchase that home. And so we're excited to share more of those stories in the future and help more families be able to take the next step and not put their life on hold for their mortgage.
Right. And of course, Raunaq, we have to ask, are there downsides to assumable mortgages? Why would a buyer or seller perhaps not want to go this route?
So one of the issues where we've already taken care of this at the start, we curate the listings on the platform. I'll give you an example. It doesn't make a lot of sense to assume a mortgage if there's only 10% left, right? So if you have $1 million home and the remaining mortgage balance is 100 grand, it doesn't make a ton of sense to put down 900K to purchase that home. And so if you come over to our feed, we've already curated the listings to be those which have a minimum of a 50% mortgage balance on the home, meaning that you get the best bang for your buck. And so that's one of the reasons we see people shy away. And the second is largely they're confused about all of the coordination cost. You got to get, if you're a buyer, you got to get your buyer's agent on board, the seller's agent, lender, title, escrow. That's a lot of coordination to be doing if you have a job. And so we do that as our full-time job, and we're your trusted expert to ensure that you can close.
All right. Interesting. We appreciate the insight, Raunaq. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you, Jill.